As we head toward the bells, let's bring in Capital Area Planning's Malcolm Ethridge. Malcolm, we're off the lows of the session. Still a lot of red on the screen, of course. What are you watching?
Yeah, I'm watching how the trading has unfolded this afternoon. Santoli teed it up perfectly where it looked like this week investors weren't all that convinced that the increased oil prices were here to stay much longer and that it was going to have an increased impact on markets going forward. But it looks like we're starting to come to the recognition that maybe this thing is going to be here for some time and really take our measure of how long that's going to be impactful to the markets overall.
Yeah. What about the price of oil and the interplay with the markets? We're seeing oil higher today. The markets sell off. That's been a correlation that we've seen a lot of lately. How do you think investors are kind of pricing that into the equity markets right now? And do you think that that's the correct way to do it?
Yeah, I think we have to focus on the fact that increased energy prices are going to have an impact on the upcoming earnings season. So if we can't make it out of March without having a resolution to this and it looking like there is going to be some sort of resolution soon, then we have to brace ourselves for CEOs coming on earnings calls now talking about the fact that this isn't just a temporary increase in their transportation costs, for example. This is a thing that they don't really have a read on, and maybe it's going to impact the next quarter or two in a way that we wouldn't have been able to discount. And the thing that's really saved the markets so far this year coming into 2026 has been the surprise that earnings have been as great as they have. So if we're having to now take that away, if you think about a Walmart or a Home Depot or whoever talking about increased transportation costs taking away from their profitability and decreasing their earnings expectations, that's a totally different market.
Yeah, I also see something interesting in the producer's notes here that you think it's reasonable to believe we've already seen the bottoming out of software. I know some software is down a bit today. What informs that thinking?
Yeah, I've been encouraged by the fact that as we've watched since the war with Iran has kicked off, software has traded positively on a lot of those days where there's been so much red on the screen. Save for today, I heard Christina just now pointing out some of the bigger software names and the chip names that have sold off. I'm hoping that a lot of that has been more profit-taking than anything else. It's folks raising cash to try and take advantage of whether there is an increased dip going forward. But so far, software is kind of flattened out, if not trended positive. And so I think maybe we've seen the bottom of that sell-off that started all the way back in October.
Do you think it's just that investors are not painting everything with the same brush, that maybe they're being a bit more discretionary when it comes to software?
I hope so. I hope that maybe we're looking at that as a place where there are opportunities to be had regardless of whether the oil prices stay as high as they have and also regardless of whether the conflict with Iran rolls on.